Hi guys and welcome. On this video we're going to understand where are the places which you can get a personal loan from and review the pros and cons of each source. The process of getting a personal loan has already evolved. Some years ago lenders would first want to know your credit score, look into your tax returns, and find out your employment details. After that they would decide whether or not to give you a loan and at what interest rate. Recently, a new crop of lenders has risen who have strayed from the traditional path. They now include factors like your SAT scores and social media accounts to evaluate if you can get a loan and how much interest to charge. Significantly, this has made it easier to get a personal loan now than when credit unions and banks were the only options for borrowers. Personal loans can vary in size, amount of principal, and term length, period of repayment. Some loans can run for a full year, while others, like payday loans, are usually due in just a few weeks after you borrow. If you settle a payday loan with a tiny window of time, you won't have to pay interest, but you need to pay the origination fee for your loan. Some other forms of personal loans, including installment loans, begin to stack up interest in one day. The monthly interest payment will depend on the size of the loan and the interest rate. Some lenders will offer a lower interest rate if you opt for a longer term. A good personal loan calculator can help you check whether you can save money by computing which interest is cheaper between terms. You can compare between lower interest for a longer term and a higher rate for a shorter term. The best rule, of course, does not borrow more than you can afford to pay off. Your best options to get personal loans are traditional banks, credit unions, and now online lenders. From any of these three sources, you stand to get a fair loan with interest rates that are within your means to pay. If you have established a long-standing relationship with a bank or a credit union, they are your best option outside of 0% APR cards. Depending on your length and quality of relationship with them, you may even qualify for special loans with special terms and privileges. Here's a tip. Applying for an online loan is easier than what you may think. If your bank's offer is not too friendly for your needs, or if there are no banks near your place, you can just go online and fill out a form. The first source of personal loans is national banks. You may have heard of these name brands when it comes to personal loan programs: US Bank, Wells Fargo, and Capital One. In fact, you may have already transacted with one of these banks. That would make borrowing from them more attractive for you because you already trust them. It's not just the big banks anymore where you should look into. There are now some good online banks that offer nationwide service and provide a variety of loan products to choose from. The pros are pretty clear. Big name banks can offer a ton of options. You can have your pick of terms, length, fees, incentives, and other offers. You'll probably find it easier to choose a loan that really suits your needs and preferences. What's more, these big banks have facilities that provide convenience for borrowers, such as online bill payment and a 24/7 customer helpline. However, big name isn't always synonymous with big service. In some banks, it may be difficult to talk to a bank manager or loan officer in person or by phone. In some cases, they might refer your account to a low-level employee or an inexperienced bank agent. These people may not have the authority or flexibility to grant exceptions or might have to follow strict rules and guidelines for your credit scores and borrower eligibility. You will find it more difficult to get a personal loan from them when you have fair to poor credit. The next place you can get a personal loan is credit unions. Credit unions remain to be in the forefront of the personal loan industry, although they issue lower loans than banks. Membership is the key differentiator between a credit union from a bank, so in order to qualify for a loan, you have to be a member of the credit union. On average, credit unions charge lower interest rates than banks. Another advantage is their location. On average, credit unions charge lower interest rates than banks. Another advantage is their location. When you have a question, you can just drop by your branch and talk face-to-face with an expert rather than just doing it on the phone. Many borrowers also prefer the personal touch of a credit union, including the flexibility to tweak your loan terms and conditions to suit you better. You might be used to paying online or checking a loan balance via the internet, but it may not be applicable to a credit union. Some credit unions remain old school and have not yet invested in such technology. Smaller credit unions usually carry fewer products and services compared to bigger ones. Make sure that your local credit union has the product that you really need. Online money lenders is another type of lender to consider. Do you want to get a loan without leaving your bedroom? You can get a loan real quick from an online lender. It's so fast, sometimes the money is even in your account the next business day. However, there are many things to consider before taking such loan. Due to the cutthroat competition in the personal loan market, online lenders try so hard to distinguish themselves from traditional lenders. Some of them have innovative lending guidelines that skip traditional credit scoring models or offer extras like flexible payments, waive fees, or schemes to lower interest rate during repayment. Online lenders like Earnest, Lightstream, and SoFi focus on strong credit borrowers by offering high loan amounts and low interest rates. They normally consider credit scores of 690 to 719 as good, while a score of 720 and above is excellent. See how your credit score is calculated. Other lenders will try to catch borrowers with less than perfect credit. Avant and Lending Point are two of them. Rates will be higher, of course, but it is easier to get an approval if your credit score is just average, 630 to 689, or bad, 300 to 629. Online money lenders are fast and easy, plus there's not too much paperwork. You just simply key in the information and wait for approval. It's the best alternative for those with poor credit because these lenders position themselves to work with bad or no credit. However, some of these lenders may charge out-of-this-world interest rates. Do not be surprised if you find that some charge 100% APR or even more. Once you are caught in, it can be very difficult to break out because the fees cost will keep piling up. In many cases, it would be better to first exhaust all other options. What about bad credit borrowers? Borrowers with bad credit have these options. Find an online lender that caters to borrowers with bad credit. Some of them will factor in non-traditional elements such as earning potential in their decision-making process. Get a secured personal loan. In this case, you will need to put up a security for your loan such as your car or a certificate of deposit. Find a cosigner for your loan. If you have a good friend or a relative with a good credit, he may help you qualify for a loan or get a lower interest rate. The catch is, your cosigner will have to pay for the loan in case you don't. Now, let's discuss the benefits of a personal loan. Yes, they have high interest rates, but personal loans have their own advantages. They build your credit portfolio. Personal loans are great in a sense that they can build and expand your credit portfolio within a short span of time. They are also good in a way to increase your credit limit since your credit limit is directly dependent on the health of your credit portfolio. You can add to it positively by managing your personal loan properly. They are faster to process. Personal loans are quite simple and do not require too much paperwork. Many banks would even grant personal loans instantly for their existing customers with good credit history. They are very flexible. Personal loans by themselves are flexible enough. Lenders will not restrict you to use the loan amount in a specific way or purpose. You can use it for supporting your business expenses, enjoy a vacation, pay for a wedding, buy something expensive, or renovate your house. This flexibility makes it a popular choice for a number of situations, especially when unexpected items or expenses arise. On the bottom line, personal loans are unsecured fixed-term loans that can serve practically any purpose. Pay for your wedding or honeymoon, remodel your home, or fly to see the world. Depending on your credit score, a personal loan may even have a lower interest rate than a credit card, although this is not the general rule. However, they can still be a safer financial tool because it simplifies paying off your debt through equal installments each month. That's it for now. On our website you can find more posts as well as calculators and other financial tools. Considering a personal loan and not sure which is the right place for you? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.